There we
Yeah.
go.
Coolio.
All right. Well, Kyle, thank you so much for taking the time to explain the world of insurance to us.
The fun world of insurance?
Yes. No, I'm very excited about today. So I figure we're just going to let you go and then I will just ask questions along the way. But
Okay.
I'm really excited and appreciative of the time that you're spending with us.
Great. Well, I appreciate the opportunity to do this. It's always good to, kind of come back to basics, right? And refresh. Sometimes you get so just deep into what we do day in and day out. It's like, all right, I got to take a step back sometimes. So
yes.
Thank you for the opportunity. I am Kyle Rheiner with Arthur Hall Insurance. I am the food and beverage practice leader here. And I run craftbrewinginsurance.com. So I've been working for about 10 years now with all the food and beverage world. My mother spent her life bartending and serving. And then at 12, I was bussing tables. And then I started working in the restaurant business. I put myself through college doing that. Came out of college, worked in the financial industry, and continued to serve tables because, when you make a lot of cash on the weekends, it's a beautiful thing. And so it's a great industry. And I just, I decided that why don't I pair my experience with the insurance business? And it's been 10 years. I work with over 120, breweries, distilleries, restaurants, and I really enjoy it. So I get to have fun. And today's topic is, do I have the right insurance? Not all insurance programs are the same. Not all insurance agents are the same. And so here we go.
Yeah. And I have to say, I think that when I met you for the first time, I think it's true that having worked in restaurants and understanding restaurants makes you very unique. Because I feel like a lot of times, similar to accounting, it's like people know insurance, but do you know how that really works with restaurants? And there's so many risks and so much fear, I think, with restaurants, that I'm excited for this, just for people to ask good questions. And, please, anyone who's watching this, even on demand, post in the course. We'll make sure Kyle gets the questions, because there's so much fear with insurance of do you have enough? Am I covered? The what ifs. And so I think this is a great time to really just ask those questions and dig in, so you have peace of mind into 2022.
Yeah. And just like Anne is, part of your team, right? Your attorney, your CPA, your insurance agent, right? They should be a team. This is your trusted advisor group. And you shouldn't be afraid to call them and ask them stupid questions, right? Hey, what if I do this? It's like, okay, right. Well, here's what would happen. Or, wear and tear isn't covered. So, what is it that we're talking about? And hopefully we keep it sort of high level today. We're going to walk you through a couple things that, again, are going to hopefully make you think about your program. Again, do we have the right coverage? So I'm a certified insurance counselor, just like Anne, right? You take an exam, become an insurance agent, become an accountant, and then you go for ongoing, 3 years of additional exams to become a certified insurance counselor. So I like to get down into the weeds on the coverage. Not everybody does. So disclaimer, right? For the sake of the insurance agency, this is a high level conversation. This is not specific to your building, your business model. Everyone's got some different things here. So, Arthur Hall, Craft Brewing Insurance, again, not liable for any issues arising. We are here to help. All right. And we're here to have further conversations.
Yes.
So again, today's goal is to educate and to equip you and to kind of give you 3 nuggets to consider when reviewing your risk management program, things to talk about in your next safety meeting with your staff and again, your management team. And maybe you have investors or directors and officers, and just some things, hopefully, again, stick in your brain to take you back. I've been on the cover of a magazine for all those out there reading Insurance Agent magazine, Independent Agent magazine. I had an interview with them. They called me and said, hey, we noticed you're working with a lot of millennials. You're working with a lot of startups. And this was, going back years. Eventually, after 3-4 years in the business, they said, hey, we interviewed a bunch of people and we liked your interview the best. Would you like to be on the cover of a magazine? And I was like, all right, cool. My daughters think it's the greatest thing on the planet. I have it, my in-laws framed it. It's on the wall. My daughters come in and like, Dad, you're on a magazine. I'm like,
it's awesome.
That magazine that everyone's reading out there. So
yes.
So that was the cover story. Again, working on a niche, specializing in what you do, doing one thing well. I'm a huge proponent of that, being a general, instead of being a generalist and doing a lot of things okay. I want to do one thing well, right? Let me stay in my lane and be confident and do my best at it.
Yes.
Yeah. So again, niche master was I was kind of put in that category of a niche master. Insurance Business Magazine said, hey, these are the young guns that, the 40 under 40 in the industry who are going to change things. I got that award in 2018, 5-star professional, up and comer. So all these things, again, it's really a testament to just believing in what we do and doing it well. And again, certified insurance counselor, have my property and casualty license, and work in all 50 states. And we also do life insurance. So when we're talking into that operating agreement, that key man life insurance, we also have those opportunities.
Nice.
Why are we doing this, Anne? To protect your assets and your income, right? To protect your business, all the things that you put your blood, sweat, and tears into. Why do it if you're not going to protect it? So let's protect it. I also like those glasses. Those are my favorite. The Tiku glasses are the best.
Yes.
All right. So do we have the right insurance? Today, again, I'm going to give you a high level of what we're going to talk about. We're going to talk about it. And I'm going to tell you what we talked about. Claims examples to kind of give you an idea of what happens, right? So I'm going to start off with that. I don't like to lead in fear, but just say, here are the things that happen in the restaurant business, in the brewing business, and how do we cover those? Mm-hmm. What are the must-haves, right? You're going to have the minimum amount of X, Y, and Z that you need, right? What and who dictates coverage? A lot of folks say, hey, I just need this. It's not true. You need more than that. And a lot of times your leases or your loans with the SBA or the bank are going to say, you need this, this, and this. So we need to make sure that we are reviewing this for you. We do that annually. Sometimes you pay off a loan and we don't need them listed on the policy anymore. Extras. All right. So we had the must-haves, and then here are some of the extras that we really need to be thinking about as we go on. A lot of these claim situations are changing, especially, EPLI. So employment practices liability, sexual harassment, wrongful termination, discrimination, furloughing, COVID, cyber liability, right? Ransomware, Bitcoin. What's a Bitcoin? I don't know. I'm trying to learn. Hired and non-owned auto. Are we using personal vehicles on behalf of the business? Flood insurance. You don't need to be in a floodplain to have flood insurance. You could still buy it. It's also less expensive when you're not in a floodplain. And then we have that giant flood last year.
Right, exactly.
For everybody not in a floodplain, had a floodplain. Didn't
Right.
have coverage, unfortunately. Directors and officers, again, we're getting into when we have boards of directors and other folks who are making decisions on behalf of the business, whether it be money or safety type situations. Again, key person life, we do life insurance. Talk to you about how to value your contents under your roof, value your building. There's different ways to do it. Some are better than others. And what's an umbrella? All right. You can think of it as, hey, it's something that'll protect you when it really rains hard. That's what we're going to talk about today. A couple other items. This is probably going to run over time. I'm not going to. This should probably be 2 presentations. But I like hanging out with Anne.
Yes.
All right. So we have vendors, we have contractors, we have other folks that we work with. We need to request their certificates of insurance. What's an audit? Why do I need to do it? I hate it. It takes up too much time. What happens if I don't do it? Are you getting the service that you desire, right? There's different levels of service in the industry. The bar's been set extremely low. Are you getting the service you need? Does your agency that you work with currently have multiple options for you? And then FAQ at the end. And obviously that'll circle back, since this lives on the internet, then we can address these, even down the road. And we ready for the claims example?
I'm ready.
All right. All right. So, when doing research for this, a lot of studies show, hey, grease fires. We have a kitchen. Grease fires become the just common, right? We're cooking all the time. Now, hopefully we have the right Ansel system, the right hoods, that sort of thing. And the staff is trained on how to put out a grease fire, right? Pretty sure water doesn't help that situation. So how do we do it? What does that result in? You have a grease fire, you shut down, we lose income. We have damage to our kitchen equipment. We can also have burns and things for our employees. Equipment breakdown. All right. When your equipment breaks down, be it physical damage or be it, a power surge or wear and tear, we have a problem, right? You're going to have spoilage probably in your walk-in cooler. We're also going to lose income if we can't be open, typically the next day or something like that. And those both fall. You can see on the right-hand side, property. Property in parentheses means that this falls under your property insurance policy. And I'll get into that. Property is not just property. It's lost income. It's spoilage. It is physical damage. It's more robust than just property. Happens all the time. Not your fault. Patrons slip and fall in your place, outside of your place. You may not own the building. Your lease might say you are responsible to keep the sidewalk clean, ice removal, and hey, that little gap in the sidewalk or it's unlevel. Sorry, it's your fault. So that's why we review the leases. And slip and falls. A couple months later, you get that letter in the mail. It says, hey, this is a letter from the attorney. You have a liability claim. This could fall again, liability, bodily injury to others, and then you have your umbrella that extends liability policies. Employees, cuts, constant, right? Your back lifting situations, right? You pull your back out, twist an ankle, hurt a knee, lifting something heavy, workers' compensation, right? So these again are the top claims that we see all the time. I get cuts weekly. And then they say, hey, you should wear a glove. Well, then they actually say that the glove makes it worse. So you do what you got to do. Every situation is different. Every chef is different.
Now, I have a question on this. So for the auto, if you have drivers that are 1099 and not on payroll, does that make a difference in terms of coverage? Is that putting you at risk?
So it all depends, right? As you know, probably, right, a 1099 versus a W-2 employee, you can even if you're 1099, the judge is going to say, hey, did you show up to work when the employer told you to? Did you use the employer's tools, knives? Did you go home when the employer told you to? Yes, yes, yes. Typically means you're an employee. So you're going to be covered as such. When we have an insurance policy, one of the first things, I know you all read the 300-page document, right? It says, who is an insured, right?
No.
So XYZ Restaurant LLC, who is an insured is you. And you stands for directors, officers, managers, the directors, officers, owners, the employees. And a lot of times it could be a volunteer working on your behalf, and things like that. So ultimately, yeah, it could be covered. Again, depends what vehicle we're driving, depends if we gave them permission to drive, depends if they were doing, like, you were on a delivery, but you stopped at Wawa. Right. So there are gaps in coverage there where coverage stops and starts. Was this in the course of work? There are gray lines. There's also a good reason to keep your general liability coverage with the same carrier as your auto coverage, because general liability will end at a point and auto will pick up. And if you have different carriers, there could be a gap in between where it's gray and they're saying, well, we're going to pick up here and we're going to pick up here. And then we're saying, well, there was nothing in between.
Okay.
Yeah, we can get into the weeds at that.
Okay.
Whose vehicle was it, right?
I was going to say, what if it's the employee's vehicle? Because I feel like so many restaurants are trying to go this route to compete with the Uber Eats and the DoorDash, but there's a lot of risk, I would think. Yeah,
a ton of risk. And the auto line of business is the most common claim in the United States.
Wow.
So it's been interesting too with COVID. When COVID originally happened, less people were driving. So there were less auto accidents, which is good, but there were more speeding tickets because the roads were wide open. I think people kind of forgot how to drive, right? People forgot to look around.
It went crazy. Yes.
Can't believe it's been 2 years ago. It was like,
I know, right?
So, but it's still happening. So, but yeah, auto is, and then auto claims now. I just had a Toyota Camry. Windshields used to be $500.
Yeah.
Now they're like $2,800 to fix.
Oh, wow.
Of all the sensors, and then the techs at the dealership have to be trained in that specific, that brand, right? That make model. They have to be trained in that. So the cost of labor goes up, the cost of parts goes up, all the sensors and reprogramming, and the cars are kind of computers now. So a $500 windshield is now $2,800, which is almost 6 times the cost of an insurance claim, right? So those continue to go up. Distracted drivers, texting, youthful drivers, none of that helps. That auto insurance market is going to continue to increase. Not much we can do about it except drive safer if possible. It's tough. Harassment, wage and hour, employment practices liability, and those are very common claims. I've had a number of them. We talk about that as we go.
Okay.
And again, so that employment practices is typically an excluded policy, excluded coverage on your policy. You got to buy it separately. You can add it on. Those are gaps. Health shutdown. I wanted to put this on here. If you have a health inspection and you're shut down because you violated XYZ, you had a number of violations, no coverage for that. If you lose income, you have to shut down. A policy is going to say, hey, you have a shutdown. This is excluded because of this. No coverage. So just be aware of that. All right. What are the must-haves? So the minimums, right? We have general liability, liquor liability for serving alcohol or producing alcohol. Your typical policy is going to give you $1 million per occurrence, $2 million aggregate. So what that means is for any one occurrence, any one claim, you have $1 million of coverage. For any given year, we will pay up to $2 million total. You can have 12 claims that equal up to the $2 million first, or you can have two $1 million claims. Again, if you have a $2 million claim, the most they'll pay is $1 million. So that's where we get into the umbrella. How do we extend that? Some of these companies will give you a $2 million per occurrence with a $4 million aggregate. Every carrier is different. Every risk is different. The strength of your management team, the longevity of your management team can help an underwriter get to those larger limits if you have the experience. The term liability, this means bodily injury and property damage to others. So this protects you in the event that somebody is injured or somebody else's property is damaged and you did it. Or actually, I guess sometimes you didn't do it, like that slip and fall type situation, but maybe you were negligent in keeping that sidewalk clean. So they do have to prove negligence. A lot of these have been going to court now. We've been in this like world of, it's called social inflation. You can look it up. Started late 2019. So, obviously COVID has driven up insurance premiums, but also so has social inflation. Again, so there are investors going, hey, I saw that you have a slip and fall, you have a suit, you want to file against this business. We're going to help you fund it. Typically, you wouldn't have the funds to pay for the attorneys and take it to court, right? You just settle.
Wow.
So now these investors are going, hey, we're going to pay your court costs. We're going to get you there. So more claims are going to court. More claims are paying out larger amounts. So a $600,000 claim may now be 1.4, right?
Wow.
So this goes to court, it pays out, and those investors are taking a percentage of that, driving up insurance costs. We're kind of coming out of that. When I first got in the business, we were in a hard market, social inflation type situation. And so it kind of, trying to look at my screen here, but it kind of goes like that, right? So when I got into the business, we were up here, underwriters weren't giving favorable pricing and they were giving renewals, 8 to 12%. That's kind of where we're at now. It's starting to come back down. But it's been a 2-year period. Again, when it comes to the must-haves, well, we need property coverage, right? We need the contents under our roof. We want coverage for the improvements maybe that we did to the property. If we're a brewery, we put floor drains in. If we are a restaurant, maybe we put in some of the hoods that are attached to the building. Some of the stuff that won't leave the building when you leave. Business income. It's a must-have. Not every policy has it. Not every policy is going to have that equipment breakdown. And that's kind of where the insurance agent who specializes in this is saying, yeah, I know your lease might not say it, but what happens if somebody drives through the front of your building?
Right.
Can't open, can't pay your bills. What are you gonna do? We need that coverage. Equipment breakdown, again, leading to that spoilage. Again, maybe your lease doesn't say that you need equipment breakdown, business income, or spoilage, but me as somebody who worked in the business, understands restaurants, I'm saying, you got to have it. If you don't want it, you got to go somewhere else. Because you're going to have that claim and you're going to come want to come after us as an agency and say, hey, you didn't offer it. So these are the things that, again, we want to make sure that you are including on your policies. And there's different ways to calculate those items and things like that. Again, loans and leases are going to dictate it. I've had leases that said, hey, you are required to carry a $5 million, $10 million umbrella. Depending on the age of the business, how many locations you have, how big is the space? We've negotiated some of those down, that $5 to $2 million, things like that. Hey, you need to carry $1.7 million worth of contents. because you have a $1.7 million SBA loan, right? Collateral. So these things will dictate that. So it's important for your agent to review this with you
Right.
annually. Yep. And that's your business owner, your banks, and your lenders.
Yep.
Again, all part of the team, right? So I like to get in touch with, and your accountant. I want to know Ann. I want to know your attorney. I want to know your banker, right? And then if they have something they need, they can call us too, right? We have a symbiotic relationship. Again, the extras, they're recommended, but nowadays we're starting to see them more and more. I recommend them. Employment practices liability insurance. Again, that is your sexual harassment, wrongful termination, discrimination, furloughing. You didn't hire me because you fired me because you furloughed me first because all of those things fall under that. Those are a lot of times the non-tangible type claims. It's not a property damage. It's not a bodily injury, but it's a wage and hour situation, right? Some of these things are not tangible. Cyber liability, first party is my business. Third party is all the other businesses that are affected by my breach, right? Sometimes you're going to have the exclusion on the policy unless you add it. So we add in the cyber. You want to try to get that third party coverage. Sometimes you can add cyber to your policy for maybe $25,000, $50,000, $100,000. Probably better, same thing with the EPLI, to get a separate policy that's specific, more robust, it's going to have more coverage. Hired and non-owned auto. So that's kind of what we talked a little bit about with the delivery drivers. My restaurant does not own any vehicles. So I have employees run to the bank in their own vehicle. I have employees go to a beer festival in their own vehicle and they take my stuff, right? My jockey box, my beer, my stickers. So in those situations, this is like a $200 coverage for the year. You get $1 million of liability, which means bodily injury and property damage to others. So my employee driving their car gets in a car accident, hits somebody else. We have $1 million of bodily injury and property damage to cover the vehicle, to cover that person's medical bills. So again, having this coverage on $200 for $1 million of coverage is a sweet swap, I think. And again, that's when you are using, so a hired vehicle is a rented vehicle. You might rent it from Penske or wherever. And non-owned is a vehicle that the business does not own, that the employee owns it. Caveats there are that hopefully the employee has insurance of their own, personal liability. Because again, we're going to protect the people that they hit, but we are not going to cover the damages on their vehicle, your employee's vehicle, because they should have their own insurance. You can ask that they carry minimum limits of X, Y, and Z. I've provided that document to folks saying, hey, make sure they have this. And what else? We got, they are driving their own vehicles. Oh, sometimes on a personal auto policy, there is an exclusion for business use. So while we're not covering their vehicle and we think that their vehicle may be covered by their personal auto policy, their personal auto policy may say, nope. So that damage on to their car may be out of their own pocket.
So I have a question on that. So do you think that like as an owner, because I feel like this happens a lot and we see this because, when we take invoices every week or we make people take pictures, It's like, oh, so-and-so ran to Giant or so-and-so ran to Costco or, oh, we were out of milk and they ran to get it. Do you think this is something that the owner should have a conversation with the employees, maybe when they're hired or something? Because I feel like as owners or people running the business, you're not even thinking about the fact that they're getting in a vehicle and driving 5-10 minutes through traffic and, whatever. So I guess, is that something that you feel like they should bring up in advance?
It could be part of the onboarding process. So onboarding or employee handbook. Hey, if you're going to drive, make sure you have insurance. Make sure you carry these limits. Drive safe. You can have it. So a lot of times we'll put in a cell phone policy, right? You signed off in the handbook that you said that you wouldn't drive or you wouldn't text while you're driving. You wouldn't make phone calls. If they have to be hands-free. So those are the things that we get in the handbook situation, make the person sign off on the handbook saying that they understand and that they will comply. Those are the situations where that signing of the handbook is a protection for the business there. You can have that person run their own MVR and hand it to you. to show that they don't have a DUI, show that they
Right.
weren't driving 25 over in a school zone. You'll get points on the policy, points on their license. They shouldn't be driving sometimes. Sometimes they're driving. They might have an expired license and they're driving for you.
Yeah.
So checks
And I
and
feel like
balances.
this is where a lot of people who've been in business probably over 5 or 10 years almost should update your policy or update your handbook, because if you look at these 3 alone, how much has changed in the last 10 years. Like even cyber liability, I think of too, because if you're dealing with people's credit cards, you're taking, information over the phone or orders.
Well, in addition to that, you might have their license on file. You may be offering health insurance to those employees, and you might have a lot of HIPAA information stored on the computer that, most of this is you're getting a spoof email, phishing email, you click a link, and now that person has access to all your stuff.
Yeah.
They're typically, and the scary thing about cyber is that the policies, the government, we're always going to be behind the hackers. We can't really protect the next step because we don't know what it is. So they're usually ahead of it. So it's scary. I'll go to a cyber liability seminar and not want to use a card or my phone for like a week and a half. Right. But that's, it's not realistic, right? We have to go do those things. It's like, all right, I'm going to use cash only. It's scary.
But yeah,
it's affordable. You'd rather be caught with it than caught without it. I've had plenty of situations already in the cyber world of claims where, I have a CFO standing next to the CEO, and the CFO goes, "Why'd you send me this email to pay this invoice?" And the CEO goes, "I didn't send you that."
Wow.
So you click that for a $67,000 invoice, and it goes to the hacker, not to the contractor or the supplier that you ordered from.
Right.
It's scary. Phil Abundance was hacked during COVID. They were building a new facility. Then they clicked a link, to pay the contractor. It didn't come from the contractor. It was something like $1 million they paid. I think it was $970,000 invoice they paid to the wrong party.
Wow.
And it's like, that's a nonprofit. They don't have that kind of money. And
yeah,
they're helping other people and you're stealing from them. It's scary. So
you
never know who's behind the other side. Cyber hygiene is a whole course you guys can take. That's a whole separate conversation. It's a whole separate presentation. We have some really skilled people on our team in that world. But yeah, going to a seminar, it's like, I'm using no technology but it's just not practical.
No. And if you think of how connected all of your employees are, like they're all on their phone. So it's not where you have a bubble anymore. I mean, you really have the outside world right there. So
so I always recommend that multi-factor authentication, right? So, when my wife logs on to Amazon, I get a text message, here's your 6-digit number to log in. Right. Is this you? Right. And then my wife's like, what's the number? Like, all right, at least I know it's you. Right. So, but yeah, you need to have that multi-factor, right? There's a company I think called One Login, where it's like $2 for security a month and $2 for the multi-factor. So $4 a month will give you that second layer of security. Definitely look into it. They call it MFA, but multi-factor it's not perfect, but it's an extra layer. So it helps. So flood insurance, I mentioned, we do not need to be in a floodplain to purchase flood insurance. Anybody can purchase it. If you're not in a floodplain, it costs less. But again, it's a tough business because it's a tough policy. It's typically costly. It is paid in full up front. It might be 20 grand. It could be 40 grand, depending on where you are. And it's pay in full up front. Not many folks have the cash flow, right? And you might have a $20,000 deductible. So you're like, well, what's the point? Right. So, I had a client who presented, they were a startup, $14,000 flood policy. They didn't take it. We documented it, went back, and they got flooded really bad. They don't own the building, but they own all the stuff inside. Obviously, they're the tenant. And I went back to the policy. It was like $14,000 policy. I think it was a $5,000 deductible. And I'm like, I don't blame them for not buying it. The chance, a 100-year flood. I guess we got 99 more years to go. So I don't know, but climate change is tough. We can't predict the weather. We can't predict that cyber stuff. It's tough. It's costly, and that affects the bottom line. Again, recommended coverage, directors and officers. You have people, investors, they put their money in the business. This is kind of like, again, that non-tangible stuff. This is going to be your embezzlement, breach of contract, things like that. Key person life insurance. I like to talk about this. When we started your business, maybe you had $250,000 of investment, right? From, hey, I'm going to start this brewery and I got my friends and family give me 250 grand. Okay, well, my operating agreement and my investments are lined up. We're funded for 250. 3 years, 5 years down the road, your business is now worth $7 million. We're only ready here for 250. How do we bridge that gap? So key person life insurance, 10, 20-year term policy, very affordable. You set it up so that it will strategically pay off debts for the business in the event that that person passes away. Mm-hmm. Property valuation. All right, so we have actual cash value. You might see it on a policy called ACV. If you have it on your policy, you need to get it off. It's not very good. That's depreciation, a depreciated value. Replacement cost is, hey, what's it going to cost if if this was damaged and we need to buy it again? That's good, but there's a caveat. Agreed value is what I like to use. I agree, and you agree, the insurance company agrees that we have $400,000 worth of stuff under our roof. All right. Replacement cost has co-insurance, and that's not the same as health insurance. I don't deal with health insurance. We have a sister agency that does, but health insurance is a whole different animal, changes every few years. It's too much to keep up with. Again, I want to stay in my lane. I want to do what I do well. So with replacement cost, you might see an 80% or 90% co-insurance. And what that means is that the value listed on your policy, that $400,000 worth of contents, we are promising that it's 80 or 90% of what we actually have. Now we're going to get into some fun. If you don't carry enough, you get penalized. You're going to get a reduction of that claim check.
Oh, wow.
Here's your formula in polarity form. So it'll show it's kind of did over should, right? The insurance that I did carry over the insurance that was required based on that calculation with the 80% or 90%, multiplied times the loss, your claim, minus your deductible is what you get. So we're dropping to an example here. All right, I got $250,000 worth of stuff on my policy, my contents. My replacement cost says I am promising that that is 80% of what I actually should have, or that's 80% of what I have. So property value is 250, co-insurance is 80%. The limit of insurance there, 80% of 250 is 200,000, and I have a $500 deductible. I have a $40,000 claim. So here, again, the minimum amount of insurance to meet the co-insurance requirement is that 250 times 80%, 200,000. Okay, so that's the minimum that I need to carry. Therefore, the limit of insurance is adequate, and there will be no co-insurance penalty. The most the insurance company will pay in this example is $39,500, which is the $40,000 less the deductible of $500. So say the limit of insurance that was carried. So they're saying, hey, we carried the proper amount. 250 is what we essentially are promising when we have 200 at 80% co-insurance. So say we had a limit of insurance of 150, co-insurance at 80, right? So now that would be, they're not gonna do the math off the top of my head, but essentially that would say, hey, we have 250 there. We're only carrying 150. So we're not meeting that co-insurance requirement.
Oh, wow.
We're going to be penalized. So instead of you getting that $39,500 check, after that deductible, you might get $19,500 back. It's because you did not carry enough. I had that example on there originally, and I think I swapped it out.
Well, one question here is, so how frequently, because I feel like this is something that could really happen if you had someone who just was like on auto renewal of their insurance policy for like 10 years, but they forgot to tell you that, hey, by the way, I remodeled my kitchen 2 years ago. Oops. Yep. So, I mean, how frequently do you kind of recommend taking a list of like what's in your kitchen and the equipment that you have? Because equipment's expensive.
Correct. Yeah, kitchen equipment easily can be $250, $500, depending on the size of the restaurant. So this is something that I do. This is why it's important to lean on the accountant, right? A lot of times you might have the value of the assets under the roof. We don't take the depreciated value. I think, what is it, like 1/7 of per year, right?
Right.
So we say, what's it going to cost you to replace this, right?
Okay.
Did you buy anything throughout the year? And so I'll talk about it later in this, but what I do, I do it annually. I actually do it probably twice a year. We have a midterm review. And then 90 days before renewal, we're saying, here's our statement of values. Here's the location. Here's the location. We have 2 locations. Here's the values of stuff under the roof. Is this adequate? Have you purchased anything? Can you get a list from your accountant? Are we carrying enough? Now, again, I use that agreed value, which says, all right, my limit of insurance is 200,000 at agreed value. Co-insurance goes away, claim pays out. You're getting it at $40,000 minus your deductible. There's no calculation. There's no chance of a penalty because of the agreed value. I don't like to mess around with that. You're paying for insurance all this year, and now all of a sudden you're going to get a penalty when you need your insurance.
Yeah.
You're not happy. You're not happy with your agent at that point. Yeah. I'm going to give you the other claims example because it was, again, so, you carried 150 was your limit. You should have had 250. You had a $40,000 claim minus your deductible. And now you're getting paid, you're getting a check for 20 or 30,000 when it should have been 39.5.
Yeah.
Business income. A lot of people say business interruption. So the real coverage in your policy, if you type in business interruption in your policy, control F, sorting through the P, you're not going to find it. So it's really called business income. It is business interruption, but the term is business income. And this is defined as direct damage to covered property at a covered premises due to a covered cause of loss. COVID was not a covered cause of loss. COVID was not direct damage, right? So that's why, this virus and bacteria type stuff, you can make that argument. Hey, it touched here. Somebody touched it. They got COVID. The way it was deemed, so many court cases, went to court. Very few, less than 1% paid out, where the judge is saying it's not damage because it's airborne, and it wasn't a covered cause of loss. So it did not meet the language to pay out lost income.
Yeah.
Usually coverage applies during the time required to repair or replace the damaged property. The goal is to put this back to where you were, put your business back from an income standpoint to where you were before you had the claim. Assuming you had no claim, what was the income you were getting? You should be getting that check to pay those bills, the utilities, the payroll, those sorts of things. So that's what it's intended to put you back where you were, assuming you had no claim. Restaurants, breweries, a good benchmark. If you're doing 5 million in sales a year, 65% of 5 million is a good benchmark to have as your business income limit. There's a business income worksheet, and I have that listed as well. So when I'm doing, say I do 65% of gross revenue, 65% of 5 million, I don't know, $4 million, that's 80%, but you get my point. So you put a dollar amount on that. That's a cap. That's the most they'll pay because you just limited it. There's a way to do it called actual loss sustained, where they'll do a calculation off some revenue amount, but this isn't a cap. So it's going to say, all right, whatever the actual loss was that you sustained, we're going to pay that, even if it's over that 65% of your revenue. Okay. So that's a way to, again, change that, just like on that last slide, agreed value versus replacement. Here we got actual loss versus a dollar cap.
This is where I think I'm so glad that we're doing this, because I feel like so many times in insurance, it's like just a line on our budgets, or it's just a number that it's like, how do I pay less in insurance? Can you tell me how to pay less? But if you think about the difference here, where, if you're a $5 million operation and you have a cap versus it might take a year and a half to rebuild. Right. We had a client who had a fire and it was like 14, 15 months to like rebuild, and then they get the permit again. And if he hadn't had, the coverage, there's no way he would have stayed in business. His whole business would have been gone. And I just feel like as an owner, however your policy is written, just knowing this and making that decision is so important for, if it ever happens. And if it doesn't, it's still money well spent because you were covered.
And there's a couple of ways to do this too. So, we get into deductibles with this. There are days of restoration. There's money in here too to let. So, your place burned down and people didn't realize that, 15 months later you're open again, right? And now you're losing income because they didn't know you were open. So there is coverage there, for that restoration period, and also to let people know and advertise like, hey, we're open again, right? That stuff is in your insurance policy because the insurance company doesn't want you to lose any more money. They want you back to business. And, I know a lot of people don't like insurance, but, they are, the company's on your side. They wrote your policy because they want to be with you. So the time deductible here is just like that property coverage that we just discussed. Might have $1,000 deductible. a $5,000 deductible or 10 or whatever it is that you choose. When we come to business income, we're talking about a time waiting period, a time deductible. So most policies, when they come across my desk, the standard says, hey, I don't know, it could be actual loss sustained or a cap on the dollar limit with a 72-hour waiting period. And here's my problem with that, being in the restaurant business and knowing that my clients make their money on the weekends. There is damage to your property on a Friday, and you cannot open Friday, you cannot open Saturday, you cannot open Sunday. You lost income for those 3 days. That could be $30,000, that could be $70,000, right? Whatever you do in a weekend. Well, here, this policy with a 72-hour waiting period, it says, we are not going to pay you for lost income until 72 hours has gone by.
Wow.
So you just lost that whole weekend's worth of revenue. And essentially you can take your insurance premium, add on that lost income, and now that's your real insurance premium, right? So I always do my best to get a 0 or 24-hour deductible, right? That damage hits, we're collecting lost income right away or within 24 hours, right? 24 hours goes by, in 1 minute, lost income kicks in. Not many insurance carriers will do 0 anymore, but most, and so these things come with a cost, right? Like that going from a 72-hour to 24-hour deductible might be $300 a year, right? Versus losing out on, 50 grand for that weekend. So that's why when we say, hey, I want something apples to apples, like, I'm not going to give you apples to apples. If you have bad apples, I'm not going to give you more bad apples. I can't do that. Right. So,
well, or just being aware, because if you think about it, even from like one thing we preach is like cash flow balance, right?
Yeah.
So if I have to have, if I want to calculate the minimum cash flow, like my cash should never go below this, I should know how long until my insurance kicks in, because like you said, if it's a weekend, that 40,000 might never come back. So that means I need to have 40 grand tucked away for the next payroll or 2 payrolls. But knowing this, almost like what you do know about your health insurance, like if the inevitable, like horrible thing happens, what happens next? And I feel like so many times as business owners, we have no idea.
So often when you just have situations where, hey, well, this one was $300 cheaper, it's like, okay, but what, let me review it. I'll give you my honest opinion. If it's better, it's better. Great. But most likely this is not going to be they're not going to be as tedious about the coverage that I'm going to be. Hey, this, I went with a $5,000 deductible, but saved $4,000. Well, I had $1,000 deductible.
Right.
If you have one claim, your policy is now the same cost or more already.
Right.
Don't nickel and dime this stuff. You see, that's why we need an advisor. That's why, I'll talk about what we do from a service standpoint to make sure that we're on top of these things. And, again, my job is to advise and educate and equip. So now coming back to this business interruption, your equipment breakdown. So you have business income with extra expenses. A lot of times I might say BI with /EE. So extra expense does not have a time deductible. And this could be that situation where I had to spend extra money to take all of my stuff from my walk-in to a refrigerated storage unit. I had to buy sandbags so that water wasn't coming in my place. These are extra expenses that the insurance company will pay because they don't want your claim to grow larger. So they will pay you, they will reimburse you to, again, hey, take all my stuff so it doesn't spoil, put it somewhere safe. So we're not paying out that spoilage claim. Paying that fee for the storage unit is going to be a lot less costly than replacing all of that stuff.
Right.
So they'll work with it. This is that business income worksheet. This is as simple as it can be. You can get very granular, but hey, total revenue minus your cost of goods sold equals your net income and expenses. Now, operating expenses that you do not expect to continue after this claim, right? So if we are shut down, well, I'm probably not ordering raw materials. I'm not going to be ordering lettuce and food. I'm probably going to have a reduced staff. So some of that payroll is going to disappear. You might be paying your managers and things like that during that time. But utility costs might go away, they might go down, and your landlord may not make you pay rent. So there are some things that factor in there that after a claim where you can't open, you may not have those same expenses. And then that kind of drops down to your business income limit. Again, studies show for restaurant, brewery, distillery, 65% of your revenue is a pretty good benchmark of your business income limit. Again, but we want that as listed as actual loss sustained.
Yes.
What is an umbrella? So this refers again to liability. This extends your liability. So this refers to liability insurance, bodily injury, property damage that is in excess of specified other policies and can be the primary insurance in the event that you don't have the right policy. It can drop down sometimes. So there's kind of two ways to do this. One's called excess, one's called follow form. Different day, we'll talk about that. But umbrella insurance is going to kick in for general liability and liquor liability, auto liability, some of those other liability coverages versus like property. Property is not a liability coverage. Property is first party, liability is to others. So again, you have a $2 million umbrella on top of your $1 million, $1 million per accident, general and liquor liability, $2 million per year. Put the umbrella on top. Now we have the 1 million plus 2 million. So it gives you $3 million per occurrence or per accident. And then that 2 million per year becomes a 4 million per year. Typically, $1,000 per year per million. Now, say we're going to do a $10 million umbrella. As you go on, from, it might be a million for $1,000, right? $1,000, maybe 750, 500, because the chances of you really clearing out that 100 or that $10 million umbrella, the chances of you hitting that will be less. So the cost as you go on will become less.
That makes sense. Okay.
So, but I have an umbrella on my home, and that's on my home and auto, right? So my property, my homeowner's liability, slip and fall in my house, on my sidewalk, also my auto liability. So again, injuring somebody or damaging their property. This sits on top of that. It's a very affordable way to get an extra $1 million of coverage. It can help protect with some of your IRA and qualified assets, things like that. So they do a lot. And again, on a homeowner's policy, it might be $250 annually for the $1 million. On a business policy, again, about $1,000 per year. And again, as we increase, the cost per unit goes down. Why do we ask our vendors for certificates of insurance? So the pest control company that's coming out, anybody supplying your raw materials, the folks who are coming out to clean your grease traps, your draft lines, the hoods of your kitchen equipment, folks looking at your sprinkler system. We do this so that we can show that, they can show that they have insurance. If they injure one of your employees or damage something while they're there, well, we want them to pay for it. Make sure that they have coverage. Also, so they might have $1 million per occurrence on their listed on their certificate. If they had claims during that year, maybe they had a $400,000 claim. Well, all right, so it says $1 million, but they really only have 600,000 available. So sometimes it might make sense to ask whether or not they've had claims to see what limit they actually have. When do we do this? Well, anytime that two contracting parties sign an agreement to do work together. If a contract happens to already be in place, but no certificate of insurance has been received or requested, one should request immediately. So again, the folks you're working with, even for like the breweries, hey, you got a food truck coming online there for the weekend. You have a yoga studio, a yoga class coming in, collect a certificate of insurance to show that the yogi has their insurance in place, and have the folks sign waivers saying, hey, my brewery is not responsible if that person gets hurt doing her yoga or his yoga. I love yoga. I do yoga. I'm flexible. All right. So audits, bane of everybody's existence. They are the bane of my existence.
Terrible.
They suck. And it always comes back to like, is this right? They're charging me too much. Why do we have to do this? It's a waste of time. So what is an audit? It's the carrier's way of determining how much risk they actually insured over the past year. Why do they do it? To ensure that they're collecting enough premium for the risks that they insure, and to have enough funds in reserve to pay the claims. And they also, like the insurance company, has a reinsurance company above them that is there to back them up. So if you're doing $1 million in sales, and you're only reporting that you have 500,000 in sales on your policy, well, the insurance company is getting shorted 500. So they're gonna. So again, the insurance company or the insurance policy in the beginning is an estimate. You hope you do these figures. So your sales figures, your payroll figures are always going to be an estimate in the beginning of your policy. Then they go back to look at your actuals and say, all right, well, here's what you did. If you overstated, say, hey, we're going to do 1.2, we did $1 million. They charge us for 1.2. They'll give you that money back. And they'll give it in two forms. They'll say, hey, do you want it mailed to you? That difference. Or do you want us just to apply to your current policy? Your payroll, right? It might've been, we might've listed, we expected $1 million. COVID happened. You only had 300,000 in payroll for the year. We're going to give you that money back. So it benefits you to do the audit. I know it's not fun. And then it comes back to me. It's like, and if you don't do it, they'll send you a non-compliant audit. It's in the policy that says, if you don't do the audit, we're going to send you a bill for double. And it's really just to get your attention. So then you do the audit. Also, if you don't do it, it'll go to collections. You're going to start getting calls from collections agencies. It's going to hurt your Dun & Bradstreet rating, hurt your insurance score. And then switching insurance carriers does not make it go away because it was from last year. Right. So I always like that. Well, we'll just switch carriers. No,
it doesn't.
You're going to get a call from the collections agency. And then you're going to be mad at me about, I don't know.
Yes.
I'll tell you. It says it's part of the contract. So what we do and what we found. All right. So at Arthur Hall Insurance, we have a proactive service timeline. The bar for the insurance in the world has been set pretty low. And what I mean by that is, I talk to a lot of folks and say, service has been great with my agent. They call me back. They send us certificates of insurance. And, when we get a vehicle, they send us our ID card. Okay. I mean, those are things that my 7-year-old can do some of those things, so that's where service is. It's great. But there are better options out there. So, from a high level, what we do, we sit down with our clients. Not everybody wants all of these services, right? But we sit down and we say, all right, for the next 12 months, all right, here's when we're going to deliver your policies. Here is when we are going to do your midterm review so that we don't get out of whack with that audit. Maybe you're doubling sales. We need to adjust your policy midterm so that that'll generate, instead of getting an audit at the end of the year because you had really good sales and you owe a bunch of money at one time, you do a midterm review. Do we need to change payroll or sales figures? I just had a company double payroll. So if we do nothing, they owe $5,000 at once later. Or if we change that now to meet that projected payroll amount, well, then that's going to generate, say, $5,000, but we can spread it over the next 5-6 payments. Cash flow is king. So proactive service timeline is going to lay out when we meet what we talk about. Maybe it's a claims. Maybe we're having a lot of claims. We need to send out loss control. How do we get better lifting techniques? How do we not cut our hands on the deli slicer? Things like that. So again, we schedule out these appointments throughout the year, pop them on the calendar. We agree to it. We sign off on it. And those are some of the things that when 90 days before renewal, we're having our conversation. Have you been with the same insurance carrier for 3 years? Maybe we want to look at the marketplace. Did you just switch to this insurance carrier? Well, we're probably going to keep it here, right? If they were the best for you last year, they're probably going to be the best for you for the next couple of years. Carrier selection, right? Is your agent coming out and talking to you about the different carriers that they represent? And are they having a conversation with you about how we are going to approach the marketplace and say, hey, listen, I create this narrative, as much as my relationship is with the business, it's also my relationship with the underwriter. Hey, Mr. Underwriter, this business has been in business for 15 plus years. Their management team does X, Y, and Z. They hold weekly meetings. They have a brand new facility. It's sprinklered. We talk about all the different parameters of why the business is safe, why it's growing. And then that helps the underwriters feel warm and fuzzy to give us some of those coverages that I mentioned before. Not everyone's going to offer those coverages. Not every agent knows those coverages exist. So therefore they don't ask for them. Therefore the underwriter is just not going to give them to them. So that's why the niche is important. So, what if we have a problem with this carrier that we're currently with? The problem's not, maybe you might like me and my agency, but you don't like the carrier. Okay. Well, do we have other options to keep you in our agency, continue the service, we'll move you to a different carrier, right? So carrier selection is important. When it comes to breweries and restaurants that probably have 10 different insurance carriers that we could choose from that love restaurants. They do it competitively. They offer the coverage. Breweries, there's 6 that exist. I have all 6. They come to us and say, hey, we see what you're doing. We want to work with you. We want the shot to work with your clients. coming back to that property value, the safeguards in your building, sprinkler, burglar, fire, camera, the values of all your stuff under the roof, the improvements you made. We line up pull out a piece of paper and say, here's your location. Here's all the limits that we have. Have you purchased anything? Did you sell anything? Do we need to make changes? Is this adequate? Right. We don't, maybe this building isn't listed, right? We have a property, it's got 2 buildings. Maybe that building in the back was left off the policy and that falls down or catches on fire. Right. These are, we got to have these conversations. It sounds so silly. Like, do we have the right addresses? Like, yeah, we're ensuring the address on the policy.
And that's where I think as owners, like taking a moment to read this when you have time, not 4 o'clock on a Friday as you're trying to get stuff out the door, but just seeing the importance, because I know even from a tax standpoint, I've had clients where it's like, we don't have an asset list. So you're thinking, well, how are you ever? I bet you're not insured to what you should be insured to. Right. You have no assets on your balance sheet. So just being aware
as the business gets more experienced, right? Like when you buy $400,000 worth of equipment, well, you have $400,000 worth of equipment, but 8 years down the road, stuff left, stuff came, you replace things. It gets out of whack over time. So, we check in.
Yeah, that's so big.
Business income worksheet, we sit down and we calculate that value, whether it's 65%, we at least come to an idea. And some of this stuff is having this conversation yesterday where the brewery owner was going, man, we need to do some of this more. This is a good homework project for us. We work so hard in the business that we don't always work on the business. And we got to sometimes step back and review really what we have and what we're doing and just take a breath, because our businesses they're fast paced, right? And they're busy. I will never call you I will only call you probably from 10 to 11 a.m. or 2 to 4 p.m. Right. I know, because again, there's been so many, I've had clients call me and say, hey, this guy just came in at 5 o'clock on a Thursday or Friday. I'm like, obviously he doesn't know your business, right? Right. You will kill me if I did that. Right. Don't do that. Midterm review. Again, we come in, we talk about that. Where are we compared to what we predicted in the beginning of the policy? Do we need to make adjustments? Did you buy anything? Are you getting a vehicle? Did you hire some people? Let's do a check-in. Yeah. We have a claims advocate on staff. So, a lot of times you get this insurance claim, you send it through, maybe you hear back, right? We have somebody on staff who used to be a former claims adjuster, former paralegal, and she is on our staff and handles claims start to finish. We actually have 2, one on personal lines and one on commercial. But they handle the claim so that, I can do my job, you can do your job, and then she can work with the claims adjusters in the background. Also, make sure you get your deductibles back and things like that oftentimes is missed. Questions?
Yeah. So I think the biggest thing is if you're someone who doesn't like their insurance policy, or you're not sure, I guess, where is a good place to start? Like, would I pull up what I had for my insurance policy for last year? Do you recommend just kind of taking a clean slate approach and saying, let's just start over? Because I do feel like so many times it's so far gone that like the policy that exists is probably wrong more than it's right.
There's been times where I've showed up, they'll invite me in, I'll come in for the meeting, and they'll pull out, their 300-page document that's still in the original envelope from the mail and has never been opened. Like, here's my policy. I'm like, when was the last time you looked at it? Yes. Blowing the dust off of it. It's not fun, but it's something that we need to look at. So yeah, I always look at, I have my own questionnaire, right? Here's all the stuff I want to know, but I do need to see your policy to see what you currently have. And maybe there's some things that are on here that you forgot about that you didn't tell me about. So I do that comparison. Again, if you have bad apples, I'm not going to give you more bad apples. I'm going to give you what we believe to be the coverage you need. And our relationships with the underwriters are going to give us that coverage at the best premium. You can scale back. Maybe you don't want some of those coverages, but I want you to know that they exist, and I want to be the one to present them to you. We look at your claims history, right? So you may have had, this might be your premium, but you may have had a $600,000 claim that we're not talking about yet, right? So that's going to affect what carriers are interested in your program and things like that. So yeah, it's a discovery call. Some people like their agent, right? So instead of all of us wasting a bunch of time and you really like it's your brother-in-law. Like, I don't want to review your policy if it's your brother-in-law and, we're all going to waste our time. So, they have to be meaningful conversations. We are a partner. I really enjoy what I do. So I want it to be fun. Like I want us to grow. I want to have an event at your place, and I want to send, my cousin maybe lives down the street. I want to send her there that, maybe she's never been there. So, it's a relationship. So
now, what about if I'm opening a new location? When
Yeah.
should I really start thinking about ensuring that location? Is it 30 days from opening? Is it 60 days? Like, is it bringing you out during construction to see what's going in? Like, how does that look?
I love going during the construction phase because I get to see, the dirt floors, or maybe it looked like an office building and in a few months now it's all knocked down and it's being turned into a beautiful brewery. So that's my favorite thing, is go in when it's a construction site and then to see the finished product, see your dreams come true and all this come to fruition. The earlier the better. I work with a lot of real estate agents. If you're looking for one, I can make some recommendations in your area. So try to be a connector. But you might have a loan out, right? You might have an SBA loan. So getting in touch with your bankers is important. Insurance takes time. So to add this location, you're going to have a closing time, and the bankers are going to say, well, we want coverage in place, or to know that coverage is in place 3 to 4 weeks prior to closing, right? We got a lot of documents to line up. Also, maybe your next location is at the beach. Your insurance carrier currently may not want to insure that. So now we need extra time to go find something else, maybe to move the whole policy, or just another carrier to take over that location there. So you could be in the woods up in upstate New York. It's called, PC9, property class 9, or Lancaster, right? Like there are spots where there's no fire hydrants, there's no fire departments. And to get, if you have a fire, they got a truck in the water. So a lot of these factors come into play when pricing out insurance. Maybe your building it's a frame wooden building with no sprinkler, but you're cooking. Your current insurance carrier may not want to insure that if you have a joisted masonry sprinklered building where they're all excited about. Now you're going out in the woods with no fire department and a wooden building. So there's a lot of those factors. So the earlier, the better. As soon as you're thinking about getting a vehicle, or thinking about a new location, those are something, as soon as you're thinking about it, I want to know.
Yeah, no, that makes sense. And then, if I'm, say, expanding my existing footprint, like let's say I decide to redo my kitchen this year, should I let you know in advance if I'm buying all this equipment, or how does that work? Like say I'm 6 months from my renewal, but I know I'm going to replace 100,000 worth of my kitchen equipment. Is there a risk if I don't tell you in advance and something happens?
Yeah, so I have a restaurant right now that's expanding. They're putting a glass enclosure. It's like 3,000 square feet, kind of alongside of their current restaurant. And so what a lot of insurance carriers policies might say is that a building under renovation is excluded. So you want to put in place a renovation policy called a builder's risk policy that will ensure it's pretty affordable and it's prorated and you can pay as you go. So it might be $1,500 or $3,000, but you're only paying by month. And as soon as you're done, it ends. And then you would add that building to your current policy. So yeah, when you have contractors on there, sometimes a contractor will take that policy out. So that'll give you the coverage in the event that your equipment that's to be installed, or maybe it's sitting there, maybe it gets damaged by water, fire, theft, whatever goes wrong with it. If your policy says that a building under renovation is excluded, well, you don't have coverage for that. So having those conversations, again, a lot of that stuff, if you have a loan out, the bank's going to say, hey, we need these documents. We need that builder's risk. We need that life insurance in place as collateral. Again, so all these conversations, should happen as early as possible, for sure.
No, that's interesting. I did not know that about the renovation. And a lot of times, I think now, people have, say, extra cash because of PPP or extra cash from like government programs. So they may not be, taking out a loan for a new kitchen, but it's more like I have cash and I need a new kitchen. So I think being aware of this, especially for expansion, is really important.
Yep. Sometimes equipment arrives early, things like that. So just being aware.
Yes. So I think this was great. I think we've covered so much great information. Like I said, anyone who has questions, please post them on our board. We'll make sure that they go to Kyle. And then next week we are covering, some really interesting things for owners, right?
It will be 2 weeks. I do have
2 weeks. That's right.
Sorry. What you can do. So here are some things that 2 items that I have in our portal that I can provide, and you can use that QR code with your phone and just email me HR Insights and I'll email it to you. But one, The HR insights piece here is, how to attract restaurant employees post coronavirus, because line cooks, dishwashers, right? This is going to give you some tips on how to do so. That's obviously been, I've been to a couple of restaurants lately where it's like they're kind of empty, but you're still on a 30-minute wait because they don't have the staff.
Yes.
And so how do we hire these folks? So I have a document on that. And then there's another document there on the right called loss control tips. This is a 2-pager. It goes through for fire safety, slip and fall, just a couple tips, things as, again, back to basics. The longer we are in our business, the more we kind of forget some of those basics, or sometimes your seasoned employees get lazy, right? And that's when accidents happen. So just some tips to talk about at your next safety meeting or pre-shift meeting. You can email me there. Use that QR code. But again, I do the Beer Mighty Things podcast and has been on.
It was great.
We talk all things restaurant, craft beverage. A lot of today was episode 124. Over 10,000 listens. A lot of insight. Again, it's a business podcast, a business library in podcast form. So you can do that. You can search it or QR code it there. And then you can find me on Instagram and Kyle at craftbrewinginsurance.com.
Nice.
And, 657 beer insurance. Got that
That's
phone number.
awesome.
657 was Garden Grove, California, but it was the only one available.
Nice.
Oh, I got
Oh, that's awesome.
And that would conclude my presentation. I appreciate the opportunity, and I'm here to help. And maybe next time I won't have a beard. Maybe it'll be longer. I don't know. It's cold out.
This is great. I know it's winter. But yeah, so I look forward to our next session, and I think this is a great starting point, and hopefully it gets everyone thinking about their insurance coverage and giving themselves peace of mind as we go into 2022. So thank you so much.
So I'm in Chester County, Pennsylvania, Downingtown, Westchester. My office is in Westchester. I sit in Downingtown here. Clients in all 50 states. I don't have clients in all 50 states. I work in all 50 states, but for sure, up and down the Mid-Atlantic region. Happy to do a Zoom, happy to meet, phone call. I'm around. I like to get out of the house. So
No, that's awesome. And just your passion for the industry says a lot. So thank you.
Yeah.
Thank you very much. And we'll see you on our next session.
Thank you, Ann.
All right. Thank you.
Thank you. Bye.
Bye.